What's happening, financial coaches? It's Pete here. Hey, want to talk to you today about a job listing that I saw here for financial coaches. And kind of one of my things that I like in general is actually learning the business and the discipline on a company's dime. And I bring this one up because it's not the only one out there for financial coaches, but it's similar in some ways to some of the other listings that I like. So, first of all, I want to say that I started my journey in financial coaching by being a salaried full-time employee. So it was really nice because, the training that I went through, the certifications that I got at the time, all of those things, and even though they were much lighter than they are now, they were all on the company's dime. So I learned a lot, especially those first couple of years, just what's out there and what the experience is like and what the problems are and where the pushback is and where clients would have resistance or really accept things. And so it was just nice not having to worry about my finances on the back end of talking about someone else's finances. And so I really encourage you, if you can get a job financial coaching, that you should take it, one, because of the training and not necessarily because of the compensation. Now, the compensation, I think, is fair for this role. Now, the other thing I will say here is that a lot of people get into this business of financial coaching. I've worked with people, talked to people. I think some of you are here because of this and you're doing it on your own, and let's say you get a client and you charge them $100 an hour. Well, if you divide that up by all the hours you put into this business, setting it up, thinking about it, marketing, all this other stuff, you could easily be below minimum wage on some of these things. And if you think about, say, getting $20 an hour by being a professional financial coach, counselor for another organization, I think actually you'll be way better off and you'll probably have some flexibility. Now, I'm going to put a link to this in the description. This is not the only one, but I bring it up because it brings up a couple of other things in my mind that I wanted to mention. We'll see if I remember them after sharing this job description with you. So this job listing here is Financial Wellness Advisor remote. So it would be a remote position. You would work out of your house, I think, for the most part. It is with the Department of Labor Federal Credit Union. Now, I bring that up because I think a lot of credit unions are hiring, and I know some of this because I'm working with some credit unions right now. And so I know that a lot of them are smaller. They kind of advertise the fact that they're smaller, more personal. They are not shareholder owned. They are basically owned by their members. And so they, I think have their values and purpose aligned in some ways a lot better than some of the bigger institutions. And so one of the things that they want to do is really truly help their credit union members and the prospects and all this stuff. Now, I will say here that this says full-time, and it says 11 to 50 employees. So this credit union might be pretty small. The other issue here that I'm going to throw out is that it says Washington, D.C., Baltimore area. And for whatever reason, even though it is a full-time virtual or remote position, it says applicants must be residing in the DC, Maryland, Virginia region. So if you are in the area of the nation's capital, then this will potentially be great for you, the East Coast. If you are not, to be really honest, I wouldn't not apply just because they say you're not in this area. I think if a company really likes you, and especially if the job's going to be remote anyway, they would figure out a way to work with you on that, especially if you're really qualified. A couple things I will say here is that it doesn't require a college education, but you have to have a high school education or GED. They also require this certification, which I don't know what it is, Certified Financial Counselor, CCUFC. My guess is that it's like a Certified Financial Counselor. It might be like Certified Credit Union Financial Counselor. That's kind of what I'm thinking the acronym stands for. My guess is that if you are experienced in this, you could probably take the test and pass it. But some of these require, some studying prior to that. And some of them won't even let you take the test for, say, a couple weeks after you register. Again, all of this stuff I think would be on the company's dime. And so that's actually kind of nice because although I'm not intimately familiar with the CCUFC certification, a lot of these certifications, especially financial counselor certifications through credit unions like their QSOs or CUNA or whoever they may provide it, are often like $2,500 or $3,500 if you buy it directly. So, while I don't know that that's as good as AFC or something like that, I think it's one, a little easier to get, and two, you're not going to have to pay for it. And once you get certified, you can hang that on your resume and on your LinkedIn profile in perpetuity, as long as you maintain that as well. So I do want to just read you here the primary duty and responsibility. I'm going to only read the first bullet. I think this kind of captures it here. But it says demonstrate a high financial literacy, acumen, and passion for guiding members to improve a member's financial well-being, right? Financial coaching. Through interactions with members via phone, video, or digital communications, determine member needs and goals, and provide information and options for the member to realize financial stability and wellness. So all the stuff that you are training on doing, you are certainly doing. Now, the one thing I want to throw out here, and this is kind of like anytime you are doing this in a role where you're representing a company, you got to remember that there is a business behind it. And the second bullet here, I guess I said I was only going to read one, but I'm going to read two. The second bullet says, inform and educate members about credit union products or services that meet the member's needs. Assist the member with expanding the account relationship through the opening or activation of products and services, and cultivate deeper relationship between credit union and the members. All right, so you might be thinking here, this kind of violates my fiduciary independence of being a financial counselor or coach. I would say that some people might have an issue with this. I have never had an issue with this. When I was a paid financial coach for a large Fortune 500 company, I got paid, and they did not necessarily say that we had to sell their products. I was licensed to do it, and sometimes I did. But the reality is, as a financial coach or counselor or advisor, whatever, you are probably talking to people, and when it makes sense to recommend something, I've also been in the position where I've been an independent, and I've said, listen, I think you should start an online savings account. Hey, Capital One has a good one, or whatever, directing people to things. That's no different than saying, hey, the company I work for actually has a savings account. You can open that. So a lot of times we're referring things. I think the difference here and the threshold is, are you pushing something that isn't what the client or the prospect needs? That's a different thing. It's a different thing to say, hey, we're really using this as like a marketing funnel for our other products. Really, the goal here is to convert a certain percentage of it, and so you're kind of pushed by some sort of quota. Assuming that you are really putting their financial wellness ahead of everything else. Maybe, fiduciary is kind of a strong word, but maybe being the fiduciary for them. And when they have a need, helping them figure out what that is, and actually shortcutting that for them by having access to, the product that you can either open for them or refer them to a deposit broker or whatever it might be, I think is actually a really big asset. And actually, that's one of the reasons I really like credit unions, over banks. A lot of banks are very driven by commissions and things like this. Credit unions can be too, but like I said, the credit unions, because the members are the owners, typically you don't want to do anything that's going to tick off your owner, which is violating the member relationship, right? So all of that has to kind of keep in harmony, and the cycle has to be one that continually reinforces itself, right? You keep the member happy, which is keeping your clients happy, which is keeping your owners happy, et cetera, right? So I think I don't have any problem with that, and I think it's actually a really good relationship, and it would actually give you, I think in some cases, more quivers or more arrows in your quiver that you might not even know about. So credit unions sometimes have like no overdraft fee accounts or high interest rate high interest accounts or whatever it might be. And so as you're talking to someone and they're like, listen, I just want to really avoid overdraft fees. This is killing me. You might say, hey, we've got this thing for you. The other thing I will say here is salary range, $16 to $19 an hour, salary adjustments based on experience and certification. So if you have been in this business, you've started it up, maybe you're not getting the traction that you want, maybe you want to learn this business on someone else's dime, I think this could be a great opportunity. I wouldn't probably sweat, $16, $17, $18, $19 an hour. Obviously get all that you can. I would also say that because it looks like it's a 40-hour-a-week job, it's a full-time job, I think you might be benefits eligible. So don't just base it on that. The fact that you might get, some of those other benefits, access to a 401k match or something, some health insurance if you need that too, that might be subsidized. I think that could be a really nice thing too. So again, East Coast, kind of, like I said, I don't know how much, I know companies that are like, hey, we really want to hire locally for this. We want to have someone be able to work in our home office, and they end up hiring someone on the other side of the country because they found the right person, and it's better to have the right person at the right price that does the job instead of just someone who meets some other criteria that is kind of arbitrary. So anyway, I'm going to link to this. I found this one on LinkedIn, and I think my greater point to this is just that I have seen a lot of these postings. There are some in the military, so there's some military credit unions, financial institutions. I've seen a lot of postings for those. Now, I will say military is kind of its own thing. I've coached and worked with people in the military. I still do. They have access to a lot of different things. The retirement plans are a little wonky. Not wonky in and of itself, but sometimes you will have people that came in on different years and they have different retirement products available to them. Some are much more pension driven, some are much more retirement savings account driven. Pension, the years of service, they're, all sorts of other things. They have some savings programs and college reimbursement and all these other things that aren't necessarily available to everyone else. So one of the things that I would recommend about that is if you do have some military background, or people in the military, or you are a spouse of a military member, or whatever it might be, that could be a great fit for you. You don't have to be in the military, to like work at USAA credit union or Navy Federal or all those things. I don't think you have to have been in the service, but also when you are coaching people and counseling them, to have some appreciation for what they do, I think is helpful in those cases. But there are a number of those jobs, and because there are a lot of branches all over, I have seen those being actively recruited for all sorts of locations. And again, my point here is a lot of people want the flexibility and independence of doing this on their own. The reality is a lot of people, and I don't know how many, but I would probably venture to guess that a lot of people who start out in the financial coaching small business journey, 80% of them will wash out in the first year. They'll kind of throw in the towel after 12 months of not getting anything. And so if you think about all of that work that you put in, only to close the doors eventually, and all that work to put in to maybe make, to be really honest, maybe $200, $300, $500. Maybe you made $1,000. But when you think back over all that time, making that money, it just wasn't worth it. Here is a place where you can go to work for 8 hours. They might not fill up your docket. You may not have a full schedule for that time. But 8 hours and make $160 plus benefits, the stability of it, the ability to work virtually, go with your family to a lake house or something and work from there. A lot of these people just want to work over the phone. I know that when I added video conferencing services, Zoom, those types of things, most people didn't want to take you up on that. They just wanted to jump on the phone in the car on their way home from work or wherever. They don't necessarily have to see you. They just want to talk through things. They don't want to have to worry about how they look and the lighting and people walking through. Most people just want to do this on the phone. And so I think that's going to be, actually a really nice working situation in most cases. So, if I were getting into this business right now, I would not start a business on my own. I would absolutely, like I did for 2 years, I was on someone else's payroll and was able to learn the business, the practice, the discipline, the issues out there, and also, like I said, not necessarily have financial concerns of my own bleed through the situation, not having to worry about sending out an invoice and negotiating a benefit, or negotiating a rate, and then worrying about, are those invoices getting paid? To be able to be relieved of that might be worth a lot. You might say, hey, $20 an hour, and I don't have to do any of that. Geez, I'd have to charge $100 an hour, and I'd probably have a quarter of my people charge off or whatever, right? And end up with $20 an hour anyway. So, like I said, link in the description, but there are more of these. But maybe if you are thinking of doing this as a business and you are also thinking, well, maybe I should just get a job. I know they don't pay maybe a lot, but I don't think, $40,000 a year for a financial coaching counseling job. I think that's pretty fair. I mean, and like I said, I don't think people are loading people up with 8 or 10 or 15 appointments a day at the moment. So anyway, just another option for you. Hopefully it helps. I'll see you later.